If you're waiting for Powell to cut rates or restart QE, and that is what's the signal to you to jump back in the markets, you might be waiting, and the rally in Bitcoin might be at 500,000 before you get that signal that, oh, okay, God, now it's time to do the thing like they did in 2008.
There's never been really a fundamental season in crypto, right? It's always been a hyper speculative kind of mania.
I think more cryptocurrency liquidity in Bitcoin brings greater value to the cryptocurrency realm in general as well.
Does gold kind of follow the same principles in your mind as Bitcoin?
I think we're going to get on for a similar sort of move. I think this is our start to $1 million.
Welcome back to The Roll-Up, your home for technical talks and open conversations that shape the modular future. Nothing on today's show is to be construed as financial advice. You can see our full disclosures list at therollup.co/ventures. Sit back, relax, and enjoy today's episode after a quick word from some of our awesome partners. The intersection of AI and crypto is moving fast, and soon an agent will be managing your on-chain transactions for you. But without guardrails, it's a disaster waiting to happen. Newton locks agents to your intent with cryptographic proofs and real penalties if they slip. Learn more at Magic Newton on X. What's going on, guys? Welcome back to The Roll-Up. We have our resident macro enjoyer, Arthur Hayes, and one of our DeFi OG builders, Mike from etherFi, in the house today, talking all things macro, Trump, DeFi products, and whether or not we're bottomed. So, guys, good to have you on.
Thanks for having us.
Yeah, thanks for having me.
It's a late night here in New York for us, early morning for you, Arthur. And the question is the one to you, as always, what the hell's going on? Are we bottomed? You're tweeting Yahtzee. I put out a tweet that was like, Arthur Hayes is going to come on the pod this week and say, Yahtzee, motherfucker, last time to buy under 100K. What are we thinking?
Yeah, I mean, I think we absolutely bottomed at 74,500 back, was it April 9th or whatever it was. The Trump team took a maximalist position on tariffs, and that was thrown out the window with a week of bad market price action. And you had Trump walking back tariffs. Now he's even saying he's going to cut the China thing. You have Besant going on a tour of all the media outlets basically saying he's got a big ass bazooka and don't fucking doubt him. He's going to make sure the treasury market's all good. You have a Boston Fed governor coming out and saying they'll do whatever it takes to make sure the market is properly functioning. And so we know that the bottom is in. They caved. They couldn't handle the stress of dramatically quickly changing the global financial system. Not to say it won't change over the next decades or whatever, but it's not going to happen in a quarter because these guys got to get reelected in 2026. So we bottomed. The money's coming. Bitcoin's up, like 25% off the lows already. And if you think back to 2022, after the FTX lows, he rallied 6x when Janet Yellen took reverse repos from $2.5 trillion down to zero. I think we're going to get on for a similar sort of move. I think this is our start to $1 million.
Wow.
Mike, yeah, anything to add?
Well, I'm definitely not gonna, I can't really add much more insight to the macro picture, but
Dude, pump your own token, man. Let's go.
Yeah. Mike's got too much. Mike is holding way too much Ethereum, so he can't. He's not feeling the euphoria. Us fart.
No, so that's what I was. That's what I was going to comment on. Is I'm going to put my neck on the line and say ETH has in fact bottomed. I think there was so much negative sentiment about Ethereum, in parallel to a shit ton of really exciting stuff happening both at the protocol level and applications, including etherFi, that are going to melt people's faces. I think people are going to be blown away at some of the shit that's happening on Ethereum over the coming year. And so I think we're going to see that ETH BTC ratio reverse.
Ooh. Yeah, I mean that's the big thing, right? Is Bitcoin dominance topped as well? Is the ultimate question for pretty much all the folks watching, right? That's kind of like the signal to go party. I'm not quite sure yet, but it's at one of the higher points that it's been in a while. The macro flows seem to be favoring BTC more, but Rob, maybe you can chime in here.
I mean, I'm gonna take the counter to Mike here. Nothing against Ethereum. I love Ethereum for all that it's got, but I mean, we just got MicroStrategy 2.0 with Canton Fitzgerald, who's extremely tied in with the administration, given that it's Howard Lutnick's son that's running that, and they just partnered with Tether and Bitfinex to basically run Michael Saylor's strategy playbook, which I don't know exactly how much buying power that gives them, but they're talking in the multi-billion-dollar range. And so I think if Michael Saylor had that kind of impact on Bitcoin, and now we're getting more Michael Saylors and more micro strategies, I think it's sort of, Bitcoin's time to shine. But then ultimately, this brings so much more liquidity into the ecosystem, just like more dollar liquidity in the global financial system pumps Bitcoin. More Bitcoin monetary value creates more liquidity in the crypto. I think more cryptocurrency liquidity in Bitcoin brings greater value to the cryptocurrency realm in general as well.
Yeah, you have like version 2, version 3 of Bitcoin MicroStrategy, but now you got Ethereum MicroStrategy starting up. You had that there was this IPO or reverse takeover of Janover, which was like which was going to run the same strategy. I think they're actually starting with Sol, and then you've got a bunch of others that are trying to run the same thing on Ethereum. So I think a lot of these sort of financial engineering games are coming to ETH as well. So that's a reason to be bullish.
Yeah. So guys, kind of zooming out towards more again on the macro side of what has just happened, it really feels like Trump has just like walked back everything that he has kind of said in the past with the tariffs and with China. Today, I think there was an announcement regarding a unilateral deal. They mentioned the tariffs on China would be under 45 or between 45% and 65%. When we're looking at the longer term ramifications of what has happened outside of just more liquidity coming into the markets, do we feel that this is going to be something that is persistent over the coming years of Trump's term, where he's going to be dealing with these trade deals and effectively trade wars that are going to cause more volatility and instability? I guess what like the root of what I'm getting at is how long do you anticipate us to be able to kind of have positive market liquidity and sentiment? And is this all still kind of striving towards more rate cuts as Trump has been pushing forward for?
I mean, I think the focus on rate cuts is a bit silly because people want to look into the past and say, okay, we know what happened from 2008 to 2019. It was quantitative easing. We know what it means. We know how it was implemented. We know the communication throughput and how that happened. And so we were trained over, a decade of, okay, Fed prints money every week. We go and buy stuff and it goes up, right? And it's just that easy to make money in financial markets. But then obviously everyone caught on to the game, like, oh, this is inflationary. Quantitative easing means inflation. Inflation means I don't vote for the party in power. Therefore, it's bad to use the term quantitative easing. Like the normal people know what that means, which means it's time to change the game. And so people who were looking for QE missed 2022 and the end of the year when Janet Yellen wasn't technically QE, but it was very similar. Money was created in some way, shape, or form. And stocks, crypto, gold, everything ripped over the next 24 months, right? Up until the Trump inauguration. And now, again, people are like, oh, when's Powell going to cut? When's he going to do QE? Okay, that's 2008, 2019 paradigm. Now we have Treasury buybacks. Again, it's not as straightforward as quantitative easing, but it accomplishes the same thing, handing more leverage to those who can buy Treasury bonds. There will be more trillions of them issued because the U.S. government runs a massive deficit. Therefore, money will be created. Again, it's not as straightforward as 2008, 2019, but it's the same thing. So I think if you're waiting for Powell to cut rates or restart QE, and that is what's the signal to you to jump back in the markets, you might be waiting, and the rally in Bitcoin might be at 500,000 before you get that signal that, oh, okay, God, now it's time to do the thing like they did in 2008. So I think we need to be mentally flexible and understand that it really all boils down to volatility in the bond market. And the best proxy for that is the MOVE index. If you don't have real-time pricing, it's published every day at the end of trading hours in New York. And if you look over time, pretty much when it gets above 140, almost immediately policymakers do something. So April 8th or 9th, intraday hit 172. A few hours later, Jamie Dimon's on TV and CNBC excoriating Trump for this tariff thing. Trump immediately walks back tariffs. 2022 in September, MOVE is above 140. Janet Yellen shifts issuance of bills for bonds. and we start rallying. And I can go back over a bunch of other financial crises and show you 140-ish levels and move, policymakers immediately react. And that strike price gets lower and lower as the leverage increases and increases in the system. And so Trump is a very volatile politician. That's his style. He likes to throw shit against the wall, see what sticks, and change. That means more volatility in the markets. Bitcoin loves volatility. We will do well. I don't know what the policy is. I don't care what the policy is. He's just going to try stuff. It might work. It might not work. We don't care, because at the end of the day, as long as volatility goes up, we make money, because we know that the authorities cannot handle it because of all the leverage embedded within the financial system. It's just that simple.
And the other ironic thing that's been happening as a result of this is that gold has been on a tear so much that it's outperformed a lot of stocks over the last 10 or 20 years. I think a lot of people saw this kind of like gold to Bitcoin rotation going as a result of effectively what you've just described, Arthur, this kind of hidden hand QE, or this, I think you described it in your article as like ski cut, right? Cutting across to make an avalanche happen. I tend to avoid avalanches, but to each your own. And so I think a lot of boomers missed gold. Like, I think a lot of people have not been holding gold because of the performance of stocks. I vividly remember reading a piece of yours maybe a year and a half ago or 2 years ago. You predicted Bitcoin 250, gold 5K. I think gold may get to 5K sooner than people think. Obviously, this has been kind of, parabolic move here now. Does gold kind of follow the same principles in your mind as Bitcoin, or are you kind of thinking about them in a different bucket now?
I put gold. I think it's the same expression of the same phenomenon in trade. However, different groups of people buying it, right? So if we want to take a look at like when gold really started to catch a second wind here in this bull market, it's February 2022, when the United States government decided to steal the money of the largest commodity producer in the world. And basically they're saying these treasuries, things that you own, there's no property rights in America. There's property privileges. And you're allowed to own these things if we like you. And if you do something we don't like, then we're going to steal it. And they stole Russia's stuff, right? And so if I'm a central bank manager and I just watch them steal literally the largest commodity producer in the world, who makes the most, base things that help us live this civilized life, and the empire stole it, why do I want to own the claims of that empire? So again, I'm not going to go out and just dump all my treasuries, because that's just dumb. Okay, well, if I'm generating more dollars on the margin, I'm going to be inclined to either buy stocks or buy gold. And that's what they've done. Pick your central bank who runs a current account surplus, and I'll tell you they're buying more gold than they ever bought in the last 20 years. That's the gold story. Obviously, Bitcoin has outperformed gold if you want to look back to 2008. But at the end of the day, I think you own gold because the central bank's going to buy gold. You own Bitcoin because the retail population around the world is going to buy Bitcoin. What are they trying to escape? The same thing. Too much inflation, possible collapse of the fiat post-World War II financial system.
I saw this in your recent article, Arthur, and on the last episode that we did, or maybe the one we did previous to that, I had asked you about kind of like the refinancing of this like $9 to $10 trillion of debt, and you had kind of talked about why it's cash flow neutral. Doesn't really add anything, doesn't really subtract anything. It's just something that they have to do. And then I saw in the article that it turns out through some mechanics, it is cash flow positive. Could you just walk through why, in fact, it is cash flow positive and adds new liquidity to the system?
So the assumption is that the federal deficit continues to rise. Now, if you look at the most recent Treasury monthly statements of the U.S., the fiscal year, which starts in October, October to March of 2025 versus October to March of 2024, spending is up 22%, or the deficit is up 22%. So this is in the face of 2 months of Elon Musk's Doge, and in the face of all these government programs being canceled. The deficit is still rising. And so I make the assumption that it's going to continue to rise because that's just how the U.S. government has been structured. And, I don't care what stripe of politician you are, it's political suicide to really go hard at some of these entitlements. You can cut around the edges. And as we've seen Doge, they said they were going to do $1 trillion. Elon walked it back to 150 billion. And now he's out the door in a few weeks anyways to go back and try to resurrect the Tesla stock price. So deficit increases. Who funds the deficit? We just talked about how the U.S. stole Russia's money, and if you're a central bank manager, we don't want your money stolen, so you don't make the problem worse. You don't buy as many treasuries as you would have bought otherwise. You buy other things. So we don't have foreigners buying at the margin. We don't have the Fed buying at the margin. They're actively reducing their portfolio of treasuries. And the private sector, people in America, are broke, right? They spent all the stimulus money on goods and services, and that economy the money is run out. So who's left? Well, these hedge funds showed up, starting in mid 2022 with a basis trade, which is I buy a cash bond, I sell a futures contract, I earn a bit of a spread, I highly leverage that trade, and I make good money. Now the more leverage I have, the more I can buy. And so that helps the Treasury fund itself, because they don't really care what the yield is. They're going to buy the bond because it's trading at a discount to the futures implied price. So if Bessent can allow these group of individuals to buy more at auction, then he can increase the issuance of bonds. I mean, he has to increase the issuance because the deficit continues to rise. So that's really the mechanism here. As long as they can provide this balance sheet that sits in the banking system by changing the rules or alleviating some of the stresses, then these group of hedge funds can buy more bonds at auction at prices that are affordable to the U.S. government. So that's the mechanism by which the Treasury buyback, which in and of itself adds no liquidity to the system, helps the well-functioning of the Treasury market and helps Bessent issue more bonds.
Got it. So it's not necessarily issuing more liquidity, it's more so issuing bonds, and they're able to do that because there's more leverage in the system.
Correct.
Got it. Cool. Okay. And you have anything here?
Yeah, I think we're all good. I think we're all good on the macro side. It's time to return
Shit coins, let's go.
Fundamentals, boys. Boys, I've been tweeting return to fundamentals for like a month long, 2 months long, and it's really the perfect left curve and right curve meme. I mean, Mike, maybe you can tell us what return fundamentals means to you. I'm super curious what your fundamental season is coming, because we may have a different understanding.
Well, I don't know. There's never been really a fundamental season in crypto, right? It's always been a hyper speculative kind of mania. The only things that have really made money in crypto have been casinos, and I guess stablecoins. Now stablecoins are large enough that they're actually making some money. But token prices have been completely disconnected from that. You have ridiculous, vaporware projects trading at 5 billion, 10 billion, 20 billion FDVs. Look, eventually gravity has to, bring itself to bear, right? Eventually reality, laws of physics have to, have some sort of application. And so fundamental season, in my view at least, is when things like cash flows, revenues, projects that have customers actually start having some sort of impact on the price of these assets. So, and I think this is, I don't know if Arthur, this is a term you coined or somebody else, but this concept of tokens for certain projects serving as pseudo equities, in the sense that they serve a lot of the same roles that you want
to do equities.
All right. Well, somebody said it. I actually think it's a good analogy to think about these things, where if a token has a claim on revenues and has some sort of governance rights along with utility, et cetera, at some point, and we see this, for example, with Hyperliquid being a great project, doing token buybacks, and that price, the price of that token, I think, has outperformed almost anything over the time period that it's been trading. So fundamental season is basically when real shit starts to matter, when gambling, which will always have an impact, starts to matter just a little bit less, and so betting on things that actually have users and revenues and real stuff that you can measure will lead to more positive returns.
Yeah, it's really quite weird how right now in the space, it feels very apathetic. Like there feels like there's a lot of, I've spoken to multiple content creators, people who are just giving up, on kind of trying. Basically, kind of feeling like the gig is up across the board, but yet we are on the precipice of what we think will be the largest, next leg of a crypto cycle that we've ever seen. So kind of weird timing. I think people are getting shaken out. However, the core crux of why, I believe, is what you're hitting on, where it's we are existing as crypto in a niche that is still just on the cusp of being globally relevant, right? Where there's actually crypto native businesses that serve tons and tons of customers outside of just, this niche that we exist in now. And so I think like the community right now has been somewhat apathetic. I don't know if it's like a disillusionment phase where we're kind of like, need to find our true core sense of self or something as a space. But there is this very unique feeling that people are kind of tarnishing as they feel that like the effort that they've put into the space over the last couple of years has kind of not gone to places. So I think that this is probably the logical next step for return to fundamentals. When I say it, I think about the ethos. I'm thinking about the core reasons of why we're here in terms of a lot of the core properties of blockchain. And so, I think bringing these back into the limelight will do wonders.
I mean, I think we always had fundamental season. If you think about what's BNB, the number fifth or sixth, I don't know, whatever largest coin.
I'm sorry, man. Essentially, centralized exchanges are not fundamentals to me, but to each their
well,
own.
Cash flow. Let's say like fundamentals in the terms of like cash flows, right? Cheesy makes infinite money. He takes a portion of that infinite money and buys back his token, right? And that's created BNB as the monster that it is, right? And so I think there's always been fundamentals. And then you have Fugazi like Cardano and Ripple, but again, it's all a spectrum.
Yeah, like when I look at, for example, etherFi, like our goal, our next big milestone that we're shooting for is to create the first DeFi protocol that generates $1 billion a year in revenue, not from gambling, but from actual users paying money for services that we provide. And the result of that, I think, we've had value accrual, we've had token buybacks since day one. I think will be hundreds of millions of dollars of token buybacks per year. In that world, I think again that acts as basically a force of gravity that pulls the market into reality and recognizing the value of that. And yeah, BNB is a good example. Hyperliquid is a good example. Aave just introduced their tokenomics model, which includes buybacks. I really think this is going to be table stakes for any serious protocol moving forward.
And Mike, I think at the top of this podcast, you were arguing for like ETH Bitcoin rebounding. And I think you would probably take the argument that, the tokens that have these buyback programs and this real cash revenue and are cycling it into these tokens are going to outperform kind of the basics, the Bitcoin, and then, maybe the L1s. And then you can kind of get more beta is going to continue to outperform. That's always, I think, the baseline. Will this outperform Bitcoin, at least in the crypto market? So, Arthur, do you agree? Do you think in the current dynamic, we're going to see like these tokenized products that have real cash revenue and are putting that into their tokens outperform some of the more fundamental coins like Bitcoin?
Well, I think this is a Warren Buffett quote. Price is what you pay, value is what you get. It's all about what price you pay. etherFi 55 cents, yeah, outperforms Bitcoin if they do what Mike says they're going to do. etherFi at some ridiculously high other price will not outperform Bitcoin from that point onwards if they do another billion of revenue, which is obviously much less percentage gain off of a higher base, right? I think so. Yes, anything can outperform Bitcoin. Is what price did you pay for it? And then what was the change in revenues over that time period? So I think that's how you have to look at it, not like in an absolute sense. Does this outperform better than Bitcoin? And so I think a lot of these tokens that are earning real revenues that are not sort of appreciated for that fact have the ability to outperform Bitcoin when we get the alt season or fundamental season or whatever you want to call it, when the Bitcoin dominance peaks in this part of the cycle, and then some of those tokens and projects really start spiking in price.
And before we get into alt season and everything that entails, would you say Bitcoin dominance has peaked for this part of the cycle?
No.
Okay.
I don't think so. I think that the folks who didn't get smoked in meme coins and all the other past alt season, obviously they're institutional investors or have family offices or high net worth, whatever it is, right? Because now Trump has shattered this illusion that there's this American exceptionalism, this like paternalistic empire that's looking after people's capital. but is now just looking after, the base voters who got this person into office, then I think these people are going to start to understand why Bitcoin exists. They're going to start to appreciate gold more, and they're going to buy less NASDAQ, buy less treasury bonds, buy less boons, buy less of everything, right? Because now there's this, oh shit, things are changing. I don't know what that change is going to mean, but I had it so good in the last situation. I might not have it so good in the next one. Let me buy something that is not correlated with the establishment persisting in its current form.
So, I mean, that just brings a large quantity of buyers for Bitcoin and not necessarily the other tokens,
Correct.
which is kind of
they're not going to buy,
doing.
shitcoin XYZ, right? That's just not. They'll get there eventually, right? Because everybody loves a degen. I don't care how rich you are, but you're going to start with Bitcoin.
However, some more kind of financialized institutions might be interested in etherFi if they figure out how we're going to get to $1 billion of revenue. So, Mike, I don't know if that surprised anybody else, but $1 billion is a lot of revenue. I have the etherFi card on my phone today. I use it on the subway like a pleb.
All right.
It's $2.90. I can borrow against it. I can borrow against my ETH as well. So that's part of it. Mike, how are we getting to $1 billion of revenue? It sounds like a very lofty goal. And kind of what has been the financial growth so far of etherFi?
Yeah, I mean, I think there's a very credible path. I mean, my background is building real businesses. My last company, we got it up to, I think it was on 70 million in revenue when I left. So I want to at least 10x that and more in this time around. And I think there's a very credible path to doing that. We did in our first year. We didn't expect it. Frankly, it kind of blew away our expectations. But we did over 25 million in revenue. We did, I think, 2 or 3 million in profit. So we raised a bunch of money in our Series A or seed round. We haven't touched it. It's sitting in the bank earning, treasury and staking yields. And the way we did that is by creating the best product in the staking restaking market. And we captured, I think we're at like 70% market share in liquid restaking and growing, and have a continually growing chunk of the staking space. So that was our starting point. Our end game is to create this new category that I think is going to become a very frothy place. There's probably going to be dozens of players in this new category, which we're calling a DeFi bank, which is an end-to-end financial services solution, on-chain, self-custodial, that gives you all the services you would normally get from your traditional bank or neobank, like a Revolut or a Nubank or Chime or whatever you use, but 100% on-chain with structurally lower fees and higher rewards, because there's just higher rewards, higher yields available in DeFi than you would get in TradFi, and lets you pay your bills, get your payroll, do your taxes, everything in one place in a single easy to use app, with none of the crypto nonsense that maybe users have come to expect, like seed phrases and hardware wallets and any of that. All of that complexity abstracted away in a great user interface that rivals anything else you find on the market. So that's the dream. Now, the way you get to $1 billion in revenue is twofold. One, growth, obviously. I mean, for us, I think we get there with sort of mid-single digit millions of users. Depends on a couple of different assumptions, but one of those is that crypto users are inherently much more valuable than a typical, let's say, neobank user. Typical neobank user generates $50 to a few $100 a year for a neobank. Depends on the particular market that they're in. Crypto users are just way more valuable for a bunch of reasons. One, they just have way more money, and two, they're just much more active with their money. So you can provide more services for those users. So a crypto user is worth more like $1,500 to $2,000 a year across all the things that they do. And so you, with a much smaller number of users, you are able to generate a lot more revenue, and you're able to provide those customers with a much higher level of service than you would provide, a typical neobank user. So you just end up having a much better product and better margins, better their ability to drive revenues. I think credibly we can get there within 3 to 4 years. I think that's a possibility. By this year, I think we'll have a run rate. I'll stick my neck on the line. I think our run rate is going to be north of 100 million revenue this year.
So the natural question of that is, disclaimer, as an etherFi holder, how am I a part of this growth? And like, what is your thought process towards being a fundamental project and kind of distributing revenues and is that possible? Is that part of the plan?
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now, maximize yields on institutional-grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Yeah, it's 100% part of the plan. So we're one of the projects that basically from day one, maybe like day 10 or whatever it was, we've had a revenue buyback model. We've had a fee switch. We started it at 5% of top line revenue. So the profitability I mentioned actually includes the revenue buybacks it's net of the revenue buybacks that we did. We started that really as just a way to set the floor. It's like, look, we're going to do something because everybody else is doing fucking nothing. We're going to say, no, this token actually has value. It is tied to the success of the protocol. It's not just a meme coin with the name of the protocol. And the goal is to ramp that up. We've done governance approval to allow us to ramp up to 25%, and we'll probably increase that over time. But we want to be, I guess, reasonable with how we do it. We don't want to ramp up our buybacks just for the sake of doing it, because frankly, we get a higher return on investment by building more product and investing more in R&D. But as our margins scale, if at $1 billion in revenue, we're doing 30-40% margins, which I think structurally in a crypto financial services company, you absolutely can get there. We're going to jack that up. We're going to jack it up to 20-30% buybacks. I don't want to, the price of the token can do whatever. I mean, it can go to zero. It can do, whatever. I don't want to forecast any kind of prices, but what I can do is say, look, this is what we're going to build for the protocol, and that's what it's going to mean as far as buybacks. And relative to the market, I think we'll likely do pretty well. And there's other projects that are, as I said, doing the same kind of thing. I think I mentioned Aave and Hyperliquid are good examples, and we see those tokens have just done way better because they've just, I think people recognize the value accrual properties of that.
Yep. Arthur, when I was talking to Akshat in Hong Kong, he mentioned that you guys were doing a bit more M&A work and kind of integrating new crypto businesses at Maelstrom. I'm curious if any of what Mike said has resonated with regards to the idea of some of these crypto native businesses, or kind of what unique ideas that you've seen, within the broader space that are particularly compelling, and if there's any kind of gaps that are available to fill, whether it's these DeFi kind of neobank applications or just tokenomics insights. Just curious broadly here.
Yeah, I mean, I guess specifically on sort of token stuff, right? I think what Mike and etherFi are doing is quite unique. We've been sort of going back and forth for a while now on their cards program, because this is something I've been in the space since 2013. I know I have very difficult time with banks, as you can imagine, for obvious reasons. And so the ability to have a Visa or MasterCard where I can tap something and spend my money is amazing. Now, this is not a new concept, right? We've seen hundreds of companies say, I'm going to build this online, offline ramp using the crypto and blah, 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 blockchain, all that kind of shit, right? And either A, it never worked, or B, the fees were absolutely astronomical. And so when Mike came and said, yeah, I've got this card, I was like, okay, well, prove it to me. Because I've seen this fucking 500 times and never have I seen a card that actually works. And I have to say, giving these guys a lot of credit, it works. We signed up the entire Maelstrom organization. We all have our virtual cards. I can see what people are spending online. I go, use my Apple Pay, tap, and it pays. I can see the fee breakdown. I see these guys aren't fucking scam artists. Maybe Visa is, but no, not etherFi. And
Visa's great. We love Visa.
But yeah, so I think this is a supremely undervalued thing. And it's going to stay that way for a while because, again, we have such bad post-traumatic stress from all these companies saying they're going to have this card that works for reasonable fees, and it doesn't. But I think these guys they've done the work. It works. We like it. We're going to keep using it. And I think, these guys will be in Token Dubai next week and doing lots of activations. So hopefully if you're going to that conference, you can, swing by and get set up in a few minutes, right? That's the whole point. Like the workflow is good. On sort of the non-token stuff, we actually have a sort of a small little buyout business that we're working on. And we have some interesting businesses that are cash flow generating crypto businesses that just are, for whatever reason, misunderstood by the type of investor that would typically buy some of these things. Obviously, we have a lot of flexibility in how we deploy capital because it's all my money, and so I don't have a PPM that I have to follow. And so, we're looking at a few strategic crypto companies right now, and we'll probably do a sort of leverage buyout of one of them and sort of try to improve the business as a sort of sponsor of that. But again, I think there are a lot of niche crypto businesses, high cash flow generating. They might not be like a blockchain business, but a service provider within the space that really isn't loved by your traditional private markets investor because it's not like the Coinbases or the Binances or the Huobi's of the world. These are much smaller service providers, but high profit margins, high potential for growth if we assume that this space grows because we need certain types of services that are only provided by crypto native institutions.
Maybe if I could add a bit of context. I mean, I think to Arthur's point, there's probably 100 different crypto cards out there right now. Every single one that I've tried has been awful, and I think there's a bunch of reasons for that. One is that believe it or not, infrastructure and tech actually matters. Creating a good product in this category, specifically this DeFi bank concept, has not been possible until, let's say, 6 months ago. I mean, we're talking it's pretty bleeding edge. What you needed to have is really good layer twos that are actually super cheap and fast. That just didn't exist until pretty recently. You needed cross-chain tech, so bridging technology, so that you, like with etherFi or other DeFi projects, you can bridge within seconds. I mean, you send money through, let's say, through Base, it shows up in your card literally seconds later. You don't care what chain you're on. You're not thinking about any of that stuff. That hasn't been possible until recently. So fundamentally, in addition to certain licensing providers, like some of the partners that we work with that enable a lot of the cross-border stuff, even like issuing cards and doing the fiat on-ramp and off-ramp, these things literally did not exist until 6 months ago. And so all you had were these exploitative, garbage products that basically didn't work. And to the extent that they worked, you end up paying 5% of every transaction just for the various kind of intermediaries. So, but I think we are now at a stage where you have this holy grail of DeFi. This is what everyone's been trying to get to, which is basically an alternative financial system that is much more transparent, much more accessible, and probably an order of magnitude cheaper to operate than a TradFi system. Like with etherFi, the 5 billion in TVL deposits, revenue that we have, we'd probably be a 200 to 300 person organization if we were in TradFi, if we were doing this kind of service for a bunch of different reasons, operational costs, etc. etherFi has 25 employees. And so that's an order of magnitude reduction in costs. That's like a law of physics thing. We pass that on to the customers. That's why we don't have to charge 5% FX fees. We don't have to charge top up fees and whatever, all kinds of bullshit that games that people play. So you just end up creating a better product, not a better crypto product, just a straight up better product. And within probably a year from now, I think it'll be essentially indistinguishable for a user from let's call it Revolut or etherFi or some other equivalent app. They won't be able to tell the difference, but they'll know this one's cheaper. It gives them higher rewards, higher yields, lower costs, and so they'll use that one. So I think that we're finally on the cusp of this of this watershed moment where you're going to see hopefully hundreds of millions and eventually billions of users getting into this space.
I mean, I think to further point on talk about that point, think about what Tether has done for traditional banking, right? Tether is the best version of a bank that's ever existed. They have like less than 100 employees. They make what is like $10 billion of net interest income a year. It's the number one best financial services institution ever created in human history, um, enabled by a bunch of different blockchains and holding some money in custody with their treasury counterparty. That's it. They don't, and they do what they need to do. They help you move money from A to B very cheap, very fast. I think etherFi can be that for all the other types of banking services that you require, because again, you can't expect a merchant all around the world to install a new POS system so that they can use some sort of like crypto enabled, blockchain enabled payment system. Visa comes out the box, wham bam, thank you, ma'am. Now I can use my Ethereum, my staked Ethereum, my USDC, my USDT, whatever, and spend it in the real world on products as I would spend a dollar, a euro, a yen, a yuan. So I think that's sort of the opportunity set that these guys have to deliver on, and hopefully the token price will, catch up with that vision at some point.
All right, let's talk tokens then. Man, I think a lot of people that are listening to this are probably decimated on their altcoin portfolios. I mean, the best of the best have just gotten smashed. I was thinking that these things are so reflexive that the value, as soon as we get any sort of liquidity kind of from the macro perspective, these will be the first things to move. Arthur, in your piece, you wrote that you expect a lot of these smaller coins to start to kind of pick up as the market as Bitcoin breaks all-time highs. What are you looking for in the crypto assets that you want to accumulate in that time period, whether it be now into, what seems like it could be in the next couple of days to weeks? Is there a certain type of buyback, cash flow, narrative idea that you're looking to kind of track down, and just generally what's your broad view there?
So first off is I want to see a business or a protocol that has users spending their own money to use the service. They're not spending token emissions. They're spending their own stables or other crypto to use this product or service. Like the easiest example is an exchange. Obviously, Hyperliquid is the poster child for that. They've gone from 0 to like 10 or 20% of Binance and OK and Huobi's volume in the span of 18 months. Again, they've just built a very, very good decentralized exchange, and users spend money in the fees that they pay, and Hyperliquid buys back the token. Very simple model. That just makes sense. And then the second thing is, okay, well, I'm a token holder. There's lots of projects that make a fuck ton of money, aka Uniswap, right? The best, DEX ever created, and me as a token holder get fuck all of that money. So then that's why Uniswap is, I don't know what the price is now. I don't even track it anymore because fuck them.
Dude, that's the one that fucking dude on that pod with Memecoin Messiah. That was his example as well, or that was yours that you guys were going fucking back and forth on, huh? Uniswap. You're at ends with that one.
Yeah, but again, so I want to, if you're doing well and you've got paying customers and you're making money and it's a great protocol and you finance yourself by taking my money and for me to buy your token, well, fuck you. I want some of that money, right? And so I want to see how I'm going to get rich. I think we've lost a lot of that ethos, right? As shitty as Ripple and Cardano are, at least their users got rich, or at least elevated themselves in terms of their socioeconomic status as those protocols limped along over the last 5-10 years. But today it's just like, okay, I'm going to take all this money and, even if I'm successful, you get fuck all. So I think that is over. We've done that so many times. And so I want to see, okay, how am I getting paid? Is it a token buyback? Is it an emission? What's the scheme? There's all different flavors depending on how you want to incentivize behavior. But again, at the end of the day, I buy a token, I want some sort of APY. And then I can take that APY and run some financial analysis and see, okay, is this going to continue in the future? What kind of discount rate should I apply to that? And then I get a multiple, and then I get, okay, well, I think this is trading cheaper, expensive to where I think it's going to be in the future. And so, again, there's very, very few protocols that number one have paying clients and then send you part of the money. It's a very small universe of projects, especially if you're talking, has enough money to really move the needle for any one token holder. So that's really what I've been focused on. And, I've been patiently buying these things for the last month and a half. some of these protocols, because I guess so. Okay, they're getting beaten up. It's just like, okay, it's not Bitcoin, so therefore I should sell it even more than I would have sold Bitcoin. And so baby got thrown out with the bathwater. And so if you've been very selective and patient, I think you've gotten some really, really good entry points into some stellar projects across the space.
Just to close the loop on this token conversation, we started off talking about treasuries and then Bitcoin, and then just went further down the risk curve with, fundamental altcoins. Like, Arthur, the first podcast that we did together was with Memecoin Messiah Murad. Like, there is no facade with meme coins. It is like you say, like, their point is to enrich the community, like the token holder base. Like, kind of similar. You got etherFi, Hyperliquid. These are projects and teams that are buying back their token. There is that profit share with the entire community. Do you have a similar ethos when it comes to meme coins? To like, they're not trying to pull a Uniswap. They're not trying to extract and keep. They're made by the people for the people. Does that also apply to meme coins?
Yeah, Mike, I'm super curious your perspective on this.
There's no cash flow in meme coins. It's literally like, I'm trading human culture. What is hot right now? And what is that worth, right? We know human culture is worth something because, once the AI overloads or take over, that's all we have is each other. And that's worth infinite money.
That's when Jesse Pollock's content coins idea is finally going to play out.
Yeah. So, I mean, that's the point of meme coins in a philosophical sense. Obviously, as we've seen with Milei and some of the other interesting folks in this ecosystem, it's not exactly how the reality holds up, but at least that's the theory.
Yeah, Mike, do you find meme coins to be particularly alarming as a real builder, or do you just kind of just blow it by the wayside?
I mean, I think of it like as different universes, right? I mean, we can talk about the different meme coins and moral properties, but like that's almost irrelevant. It's like trying to compare Apple stock to like spins in a roulette wheel in Vegas. Like, they're just different things. And I'm a terrible gambler. I try to stay away.
Every gambler is a terrible gambler.
Yeah, that's right.
That's the point.
Yeah, so I like to play poker or chess. So like those are things I get because it's your decisions actually matter. But yeah, I don't know. The meme coins are fine. People that enjoy them, great. But it's just a different universe, and I think there's various ways that the world gets there on this. But you're going to have these different buckets. Like we put all crypto tokens in the same bucket in this like really kind of bizarre way, but these are fundamentally different things. You look at, let's say, BNB, good example. You look at like a BNB versus like Trump token or Fart coin. They're just different things. Like it's not the same thing. So at some point there's going to be categories, and it's going to be much more explicit. What you're buying. We're not there yet, but I think gravity will assert itself eventually.
I like the analogy, Mike, to poker and these skill games versus pure roulette, which is pure gambling. Like you're saying, you can play chess, you can play poker. There is an element of skill, even if there's some element of chance. There is more elements of skill than going to the roulette table and picking red or black. It's totally random, in theory. So I like that take.
Unless you can martingale, then I guess.
Yeah.
I mean, you got to have an infinite bankroll to martingale.
Sam Bankman-Fried tried it. And we saw what happened.
Gentlemen, really enjoyed this conversation. Just want to close out, Mike, with your kind of 2 cents on where you guys are going to go out for customer acquisition, kind of go to market with this. Obviously, you guys just had this big launch. What's next? How do you guys take this product and start to work towards that 100 million mark? And where do we go from here for etherFi?
Yeah, so maybe I'll say briefly, like, what most crypto projects that try to create these sort of systems that people can use get wrong is they go after the wrong customer base. That's oftentimes as much as like building the wrong product or a bad product. Going after the wrong customer with the wrong go-to-market can kill you just as easily. In fact, more likely that's the thing that's going to get you. And so they do stuff like, we're going to build a crypto product for the unbanked, in Latin America or Southeast Asia. Great. They have no money and they don't know anything about crypto, and you're going to die. Like maybe in 10 years, that'll be the right strategy. But our approach is really simple. Like, we're building to start off with DeFi natives. There's some number between 1 and 10 million DeFi native users in the world. We're going to start to go after those, and we think we can get 50 to 100,000 customers over the next year from that user set. That's a subset of the current etherFi users. We think that's very attainable. Got a marketing budget to spend to do it. The next circle that we go after are crypto users who are not comfortable with DeFi because they don't have to deal with the insanity of seed phrases and hardware wallets and transaction signing and North Koreans hiding, behind every Telegram chat trying to take their money. So we think we can bubble wrap DeFi, make it accessible and easy for people who love crypto, who want to use these products, but aren't comfortable using it today. And that expands our circle to probably about 100 to 200 million users out there. There's monthly actives on exchanges. So that, I think, can get us to $1 billion in revenue. That's very viable. We get there with 5 to 10 million customers. And then let's call it 3 years down the road, we're able to go after the broader set of normies and bank the unbanked and so forth. And then that's how we get to a billion customers. But I think you got to take this approach where you start with the most fanatical users that love the product, that are willing to sort of eat glass just to use this stuff, and focus on them, and then expand outwards. That's the right approach. That's what we're doing.
Yeah, etherFi is American Express, not the other credit cards. It's for rich people. Rich people spend a lot of
nice. Nice. Well, I found that the experience has been fantastic. And I mean, I will be using it. I will put crypto.com to the wayside, man. They fucking, every time you send ETH over there and try to sell it or anything, they absolutely destroy you on the conversion. Like, just rip your nuts off. And then there's a fee it's a whole thing. So, Mike, you got a user in me, a user in Arthur, so he can, do his little surveillance on all the strip clubs that Akshat's going into or something. And, we'll get Robbie on it as well, and we'll be in good hands.
Let's do it.
Yeah, well, you guys are the pioneers. Thank you.
Alrighty, boys. Cheers. Thank you.
Thank you.
Thanks, guys.